Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets, and more specifically, I want to kind of elaborate on something that we talked about in yesterday's video. If you guys haven't already watched yesterday's video, I do highly recommend doing it before you watch this one. In that video, we talk about a lot of things relating to the longer-term perspective on Bitcoin, and everything we talk about in that video is still relevant to today's chart. So watch that as a prerequisite. Either go back on the channel or there may be a card in the top right. But in that video, I talk about the longer term perspective on Bitcoin and the falling wedge that Bitcoin finds itself in here on the 4-hourly chart. And I also talk about the longs and the shorts. As you can see right now, we find ourselves in this falling wedge with a downtrend of resistance right there and a downtrend of support right there. And while there are some technicals pointing us bearish, this would be pointing us bullish. And in today's video, I want to lay out the bullish case for Bitcoin and talk about what a new Bitcoin rally would look like. And in tomorrow's video, I'll lay out the bearish case for Bitcoin and talk about what a bearish rally might look like coming over the next couple of days, because I want to do both sides justice, because of course we don't know which side is going to prevail just yet. So anyway guys, that's what we're going to be talking about in today's video. I do think it's going to be a good one. I have a lot of technicals to point to, and if you guys enjoyed today's video, definitely consider dropping a like and hitting that subscribe button. But without much further ado, let's go ahead and get right into it. Bitcoin on Coinbase is currently trading around $3,400. Remember, in yesterday's video, we were looking at the Bitfinex chart. We're looking at the Coinbase chart today. I normally look at the Coinbase chart. I looked at the Bitfinex chart for a special reason yesterday. But in today's video, Bitcoin is trading around 3411 here on the Coinbase chart. Over the last 4 hours or so, we have had a bit of a drop. As you can see, about 4 hours ago, we saw a drop of about $30 to $40. Not a major drop, but definitely kind of showing up there on the 4-hour chart, because we haven't seen a ton of movement over the last couple of days. We've seen a little bit of a drop and a little bit of a bounce. Even especially back about a week ago, we saw a lot of low volatility. But as I talked about in yesterday's video, as we see the longs and the shorts going up and kind of mooning, to be totally honest, that trend has continued into today. That does indicate that we're seeing more volatility, more volume, and more retail interest coming back into the market as well. So we're going to expect to see a little bit more volatility coming into the end of this wedge and coming into the beginning of February, having to do with those Bitcoin longs and shorts we talked about. Anyway, let's go ahead and talk about CoinMarketCap here for a little bit, and we'll jump back on into the chart. Bitcoin across all exchanges is trading just below that resistance level of $3,500. It's down by 0.25% today, but the rest of the market isn't exactly following in kind. Tron is down 6%. But overall, the top 10 are doing pretty well. We do see that Tether's down, but that doesn't count. We see Stellar and Bitcoin SV are down, but those are 9 and 10. The rest of the cryptocurrencies up here are in the green, seeing XRP run 4% today. We do see that Everest, Bugraya Coin are the two cryptocurrencies in the double-digit green today. And as you can see, if we look across the rest of the cryptocurrency markets, they're not doing anywhere near as well as the top 10, PundiX and Hollow being down by nearly 20%. So what does that all mean? What are we going to be talking about in today's video? Well, like I said in yesterday's video, I think that there's a decent chance that we're going to see some kind of rally here. I don't think it's going to be a rally all the way back up to $4,000 or $6,000 or $20,000 or $1 million per Bitcoin or anything, guys. Let's not get carried away. But with all that said, I do think that we're going to see some bullish price action coming here over the next week or two. Now, that being said, it may be bearish for the next couple of days, but over the next week or two, I think we're going to see some bullish price action. So let's talk about what that might look like in today's video. Like I said, we'll talk about the bearish scenario in tomorrow's video, because this isn't a 50-50 split in my opinion. I think it's slightly more bullish, but there is definitely a very strong case for the bears right now that we need to talk about as well. So let's go out here to the daily chart and start looking at levels of resistance and support and Fibonacci levels and all that stuff and seeing what we're looking at. One thing I want to bring up is the MACD. Bitcoin's MACD has been below the signal line here for a little while, and it is looking like it is going to stay there unless Bitcoin starts getting some upward momentum. After we see Bitcoin break this downtrend of resistance, assuming we see Bitcoin break this downtrend of resistance, it would likely coincide with a bullish MACD cross, bringing the MACD up here above the 0 level, which would be very good for Bitcoin. That's something we haven't seen on the MACD in quite some time, and by quite some time, I mean for like the last 4 or 5 months. That would be a very bullish thing to see the Bitcoin MACD cross above 0, mostly because whenever you see the MACD being above 0, it tends to be a very bullish time for Bitcoin, like over here during the end of 2017. You can see the dates down here. If we bring the chart away, this is what we're looking at. If we look at the MACD back over here for 2017, pretty much the entirety of 2017 saw that the MACD was above 0. And for the majority of 2018, and especially over the last couple of months, as Bitcoin has been very bearish, the MACD has been below 0. Well, that wasn't an accident. The MACD was designed to show that kind of data, and that is there for a reason. So if we were to see the MACD turn bullish and Bitcoin going on a little rally here, the Bitcoin very well may actually come up here above the 0 level. It might not get far above it, but that would be a good thing to see indeed. I would very much like to see a bullish MACD cross and MACD get above the 0 level. I would love to see that. One other thing I want to talk about is the declining RSI that we've seen ever since Bitcoin has been entering this falling wedge and kind of this downtrending pattern here. RSI is rather low on Bitcoin right now. It's below 40. That's not the lowest that we've ever seen. And of course, we saw RSI drop back down to like 10 a couple months ago, back in November. So Bitcoin's RSI is doing a lot better. Bitcoin is a lot healthier now than it was then. But with that said, the RSI does have a lot of room to grow. Now that said, RSI isn't really going to propel the market in the way MACD does. When a MACD bullish cross happens, that can be like an afterburner that helps a jet engine just start taking off the runway. But the RSI is kind of just a tracking indicator. I don't use the RSI to really look for boosts in the bullishness or the bearishness of the price action, if that makes any sense, like you would see with a bullish or a bearish MACD cross. But we do have a lot of room to run on the RSI, and that is a very good thing. We did just see a cross on the stochastic RSI also, and there's a very good chance the stochastic RSI is going to start curving up here as a result of that, and over the next couple of days, because we've seen a little bit of bullish price action on Bitcoin, not very much. Now, with all of our oscillators out of the way, let's look at our levels of resistance. If Bitcoin were to go ahead and break this downtrend of resistance here in this falling wedge pattern, what kinds of levels of resistance would we be looking at? Well, there's actually a very good one that we want to talk about, and that is, of course, my favorite moving average in basically all of technical analysis, one of them anyway. You guys, if you've been watching the channel for a while, are familiar with it. That would be the 20 exponential daily moving average. You guys know how much I love this moving average. If you're new here, put this on your chart. If you're not new here, put it on your chart anyway. It's a very useful moving average, and I've talked about in many videos why I love this. I have a dedicated video on it to it on the channel a couple months ago, actually. But if we were to see a bullish, not a bullish MACD cross, if we were to see a bullish breakout above this downtrend of resistance, we would see Bitcoin, for the first time in a little while, get above this moving average. And I would very much like to see that, because as you guys know from our analysis of the 2018, 2017 bull market and bear market, whenever Bitcoin is above the 20 exponential moving average, typically that coincides and correlates with a bullish rally. Now, as you can see over here, there are exceptions to this. Sometimes you get above it and Bitcoin trades sideways, but if you're able to blast through this level of resistance, this downtrending moving average, it's typically going to be a very bullish thing for Bitcoin, and it can be another one of those things, like I said on the MACD, an afterburner that'll push the market in the bullish direction. It gives you exuberance, it gives the bulls confidence, and it gives the bulls strength to actually move the market up. So this is kind of a domino effect. We're kind of looking at the market being set up like a line of dominoes right now. You see that happen sometimes in the market, where one small bullish movement can be compounded into a much larger bullish movement. For example, what we might see here over the next couple of days, I'm not necessarily saying this is going to happen, but I'm giving you an example of this. If Bitcoin were to come up here and move up literally only about $100, break this downtrend of resistance, it would probably cross bullish on the MACD, and the bullish MACD cross may give Bitcoin the momentum to break the 20 exponential moving average. And all of a sudden, you've broken two levels of resistance and had a bullish cross on one of the most important oscillators in technical analysis, and you had the bulls on a run. Now, like I said, I'm not necessarily saying that's going to happen, but with that said, we do have the cards laid out in a way that allows for something like that to happen if the bulls do decide to take the opportunity here over the next couple of days. Like I said, there's a pretty good chance that the bears are going to be the ones that come victorious out of this falling wedge, so I'm not saying by any stretch of the imagination that Bitcoin's going to the moon. I think I've made myself very clear with that, but I did want to lay that out. Let's go ahead and look at some other levels of resistance and some other tools. I want to bring out the Fibonacci levels and talk about them. Let's go ahead and look at Fibonacci retracement right here, because one thing I also want to talk about was the fact that Fibonacci retracement, at the moment anyway, is kind of lining up on this 38.2% Fibonacci retracement level. It's kind of also lining up with this downtrending level of resistance. That being the downtrend resistance trend line and the downtrending moving average, the 20 EMA right here. As you can see, Bitcoin has a lot of resistance above it, which is probably one of the reasons that we haven't been moving up even more over the last couple of days, is because we have all of this resistance right above us, and the very skilled, I'm not calling myself extremely skilled or anything, although I do think I know what I'm talking about. The people that really know what they're talking about in the cryptocurrency market are going to be looking at the Fibonacci levels, the 20 EMA, and this downtrending level of resistance, and realizing that Bitcoin has a lot of resistance above it. Now, that could be bullish or bearish. Now, like I've said before, if we get above it, that's very good. But the fact that we have a lot of resistance right here, that actually comes into a concept I talk about a lot in the course, the Cryptocurrency Technical Analysis Academy. I talk about the convergence of support and resistance, and this is what I would call the convergence of resistance. We see that there is one level of resistance on the moving average, one level of resistance on the downtrend, and one level of resistance in the Fibonacci level. And that is an important Fibonacci level. That's the inverse of phi, which is it's the inverse of phi, which is 0.618, or 61.8%, as we can see. That's the That's the level that is immediately away from the 50% Fibonacci level, and 50% isn't really a Fibonacci level, but that's neither here nor there. The point is that Bitcoin has a lot of resistance above it, and if Bitcoin does manage to pull some strength out of it and it does manage to start moving to the upside, that can happen in a lot of ways. Perhaps we can see that Bitcoin shorts start declining here and the Bitcoin longs don't. As you can see here, the Bitcoin shorts have actually been declining over the last 4 hours, and the Bitcoin longs have been plateauing. So that could be a good sign. If Bitcoin shorts start going down, longs go up, we see some bullish price action, we see a bullish MACD cross. There's a lot of things that can kind of trigger a chain reaction here and start causing Bitcoin to move to the upside. Now, like I said, especially this little movement over the last couple of hours, there is a good chance that the bears are the ones that are going to be victorious here. But as we can see previously, this is an important Fibonacci level. It proved to be a level of support here just recently. And if we were able to get above that and these 3 levels of resistance, it would be very, very bullish for Bitcoin indeed. Now, if we were to talk price targets, I would honestly be looking somewhere between about 3,750. That's right up here around this 61.8% Fibonacci level. That is going to be an important level to look at. Watch out for that. This is by far the most important Fibonacci level in my humble opinion. And then I'd be looking at $4,000, in between about $3,900 to $4,000. That's 78.6 and $4,000 a big even. I would be looking at those as levels of resistance. And of course, also $3,500. But if we're getting above $3,500, we're probably going to be going on a rally. Anyway, speaking of anyway, I've been rambling a little bit in today's video. I did want to talk about the bullish case, what would happen if we saw a Bitcoin rally, and what it would look like if we broke bullish above the downtrend in this descending wedge pattern. Tell me in the comment section down below what you guys think of that analysis. Do you think everything I've said here is valid? Do you think the Bitcoin is going to break bullish and break these levels of resistance? Do you agree with my theory of there being kind of this domino effect? When you start breaking one level of resistance, sometimes it can compound and cause the market to break more and more and more. I've seen that happen a lot. What do you think about that? And also tell me what you think the odds of a bullish breakout of this falling wedge are, and what do you think the odds of a bearish breakout of this falling wedge are, because there is a very good argument for both. Like I said, I'll be talking about the bearish case in tomorrow's video, but for today's video, guys, that is basically going to do it. And if you have any questions, any concerns, any comments, anything at all, leave them in the comment section down below. And if you want to learn how to do technical analysis and want a much more in-depth review of many of the high-level concepts that we've talked about in today's video, like convergence of support and resistance, Fibonacci levels, that's not really a high-level concept, but anything that we talked about in today's video, everything we talked about in today's video is covered in the Cryptocurrency Technical Analysis Academy, so go ahead and jump in if you haven't already. Anyway, guys, that is going to do it for this video. I do want to thank each and every single one of you for watching. As always, you guys know how this is, and I will see you guys in the next video. Peace.